Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, March 2nd. We are drifting into March, and the dollar continues to drift higher. So was a bit wrong on my trajectory yesterday. Unfortunately, DXY is, always a bit of a guessing game. But the news is that we are back in the demand zone. We did have, a bit of an ugly 4-hour candle, but continued to overcome. And now we are back near the highs that we were at, towards the end of February. So, we were looking yesterday, at it hovering around the estimated 200 moving average. It is still doing that, but obviously now in the demand zone, and stock RSI could be set up for a little boost higher. So if this does breach the demand zone, then I would expect something like this eventually, heading into March. And if that's the case, then probably not spelling positive things for risk. So bulls in the risk category want to see it chop around here and then flow back down towards the support line that we drew yesterday around 103.7. So unfortunately, no good read on DXY other than the fact that it currently looks strong and is dipping into the demand zone. So if you were someone who wanted to get long and you are bearish the dollar, then this is, where you would start shorting the dollar if you could. Or, since you can't, you would, try and long equities or risk markets such as crypto to make a quick buck. So if this gets rejected back, minimum, I'm expecting, this to estimated 200 moving average in the 4-hour. And of course, if you can breach 105.5, then you obviously have a lot more room higher. So looking at equities, we did end up drifting down to the 39.25. We got down to 39.20 on the dot. I said we may drift down there, but more or less held at that 39.25 area where we have the support line drawn. And now we are beneath the previous daily close, of course, beneath the VWAP, beneath the estimated 200 moving average, and quite far away from 4K in the grand scheme of things. So, based on where we're at right now, if we do not see a bounce, and I guess, just to kind of give some context for equities in relation to crypto, Bitcoin and Ethereum have, slightly been moving higher. Equities have been moving lower. And we discussed this last time. We saw equities moving lower and crypto is moving higher. And of course, we got this, steep sell-off, towards, mid to end of February. And so that was basically just kind of following equities. So what this means to me is that, I'm not seeing, just because crypto is acting a little bit stronger than equities, if equities are continued to be under selling pressure, then basically crypto is lagging equities. So it's just a delay. So, and it's not really crypto showing strength in comparison to equities. It could be, but what the evidence that we've seen is that, it's crypto is more or less eventually likely to catch up to equities if equities continue their downslide. So if equities breach 39.25 and continue to head lower towards 3900 or lower, then I would expect crypto to end up weakening and doing the same. And of course, equities are still underneath this 4-hour RSI trend that we mentioned the other day. No signs of a breach. We could potentially still have another shot at it with these next set of candles, but still something to be aware of, that this RSI trend is continually rejecting price. And if it gets rejected, then I would assume that it's probably going to send us back down to either recent lows or near 3,900 or below. So looking at Bitcoin, the one good thing, and very similar to ETH, is that we have some decent market structure. So low, high, slightly higher high than this, lower high right here, if it holds. That would be a lower high. So, there is decent market structure from Bitcoin, but, this 23.3 level to me, still very critical. It's basically the pivot line, in my opinion, for, continuing to stay higher or moving lower. As you can see, we basically deviated under it, deviated. Could we deviate again? Certainly. But 23.3, in my opinion, is the line in the sand. And if we end up breaking beneath this estimated 200 moving average, which has held us up on the 4-hour since the dump, on Friday the 24th, If this fails, then we're probably headed, down near 22.5. And of course, 22.5 fails, then you have this area. And we called this area out as kind of the ideal demand zone. If price does get down here, you'll probably see a lot of long bets taken at this level if we see it. So something to be aware of. But of course, we'll have to understand what's happening, from both equities and the macro perspective around that time to see if longs are good. But from a technical perspective, if we reach down here, I would expect a bounce. I would expect, some buying activity to step in. Whether or not it lasts is, of course, another question. So current line in the sand, 23.3. Break under 23, you're down to 22.5. Break for 22.5, you're down to 21.3. And of course, as low as 20.5. And if hold 23, potentially something good happens, dollar reverses, good macro news pops up, hold 23, and then trying to breach, of course, 23.8 first. And then if you can get above 23.8, you can retarget, above 24 and 25K. Looking at ETH, like I said, a little bit more clear in my opinion. Very beautiful market structure here, still above the estimated 200 moving average on the 4-hour. Line in the sand this morning was, I believe, 1640. We were hovering around the VWAP very early this morning, and ended up, breaching lower. Definitely want to see a higher low here, which could still be achieved at, 1605, 1606, which is the estimated 200 moving average here. But if we do get a lower low, I would expect us to end up dropping back lower towards, 1550 to 1530, which is, this kind of area that was untapped from last Saturday. So, and then of course, if you can get above the VWAP, then you can, then potentially get above the previous daily close, which was 1665, 1670, and then potentially move higher. So it does not look, positive, but, we have had, higher low, higher high. So, it's definitely, you're definitely seeing people take bets in the long category here because of this type of market structure. And of course, because of the relative strength to equities. But I was, of course, cautiously optimistic. And if you took some longs, at the optimal times, you definitely still made some profit yesterday. But a bunch of alts are really, getting suppressed and sold and beaten down. Equities are obviously getting beaten down. DXY is moving higher. Bitcoin and ETH are really looking a bit ugly, when you need them to look a little bit a little bit better. So I'm not ready to say that we're just going to start dropping towards these lower levels that I called out, but I definitely think it seems a little bit more likely than not. We could see maybe one more small boost higher to reattack, those local highs again, potentially provided, equities break above, 3950, 3960, which is around that previous daily close. But I think for right now, you're probably better off trying to play a low, meaning if we tag, 22.5, maybe a decent long there. And if we tag, 1530, 1550, maybe a decent long there. If you really wanted to short here, I don't think, your risk is that bad considering just how ugly everything else looks like in context. But I personally won't be adding to shorts here. I think I'd rather play some lower liquidity. We're basically, you're sitting around that pivot point here. So, if you think that 23.3 is not going to hold, good short here, probably down to 22.5 or at least 23, for taking some profits. So that's not the worst play. And then, of course, you'll see a lot of people, due to the lack of total liquidity, longing at 23 and longing at 22.5. So I don't think we're going to see any real easy trades unless we get some, some obvious news in relation to the Fed outlook, in relation to inflation, in relation to some other, large central bank, even the BOJ news that, Bank of Japan, that they're doing more QE, quantitative easing, wasn't really enough to impact the markets positively. So there's not a whole lot that can really change the game right now other than, I think inflation coming down. And unfortunately, the data that we got is that it's more or less stayed steady for the past few months. So I think that the likely outcome is continued chop, but I do think that, if we continue to follow equities and listen to the dollar, then the markets are telling us that we're probably going to be headed lower as we head into the weekend. So something to consider there. But we'll have to see how things react tomorrow. Of course, I'm still expecting, like I said, nothing is going to be easy in trading, at least, over the next few weeks, in my opinion. Crypto liquidity is low. The equities, just don't look that attractive, and the dollars, steamrolling over a lot of over the fun that we thought we were going to have that was going to continue into March. So I would say, no longer cautiously optimistic, just simply cautious. I think, your best bet is to play the key levels that I laid out. If we're sitting in the middle of the range, obviously you can make a play towards the high or low end of the range, but probably better to play the extremes than sit and toil with, this confusion and this indecision from the markets. So good luck. Happy trading. See everybody tomorrow.